All right, guys, I welcome you guys to this session. We are done with talking about capital extent, partnership, and AIs, right? Now, we are currently in market analysis, trying to know the next move of the pairs we want to trade this week. So before me right here, I have DXY. Why do we need DXY? I don't know if any of you have asked yourself these questions. Why do we need DXY? DXY simply represents the strength of dollar. With the help of this DXY index, US dollar index, we'll be able to know if dollar is strong or if dollar is weak, right? Currently, we can see DXY giving us series of lower highs and lower lows, which simply is telling us that DXY is currently weak at the moment, showing us strength of the bearish movement. How was I able to identify this trend? Now, starting from the monthly time frame, I prefer using the monthly time frame because I like seeing. Please, if you're just joining the call, kindly mute. Okay, so I like using.
From your end.
I think I'll have to mute everyone. Using the monthly time frame, I enjoy that because the monthly time frame gives me the room to see the bigger picture of where price is coming from and where price is going to. So here in the monthly time frame, right? If you've been following me, my teachings, you know that I look out for two things alone. What are those things that I look out for? Internal range liquidity and external range liquidity. This is the two things I look out. I don't like trying to be jack of all trades, trying to no, make it simple. The simpler it is, the easier for you to understand. I have only two things. Is price currently at external range liquidity or is price currently at internal range liquidity? This is the only thing I need to know. So here from the monthly time frame, I can clearly see that price have taken out this external range liquidity here. And whenever price takes out external range liquidity, they will seek fair value or they will offer fair value. That fair value is what we call, most people know as fair value gap, FVG. That is what we call internal range liquidity. So here on the monthly time frame for DXY, I currently see that we have a fair value here, which is an imbalance or fair value gap, price offering fair value. Now, this is my monthly draw on liquidity. What does that mean? That here on the monthly time frame, I'm expecting price, market makers to come down and balance this bullish order flow. The bullish fair value gap is what we call BC, which is buy side inefficiency and sell side inefficiency, right? I want the market makers to come and offer fair value, fill up this imbalance before continuing the up movement. That is what I've seen from the monthly time frame, telling me that price is still going to come down into this fair value to balance the price. And I'll drop down to the daily time frame. What do I want to see in the daily time frame? I want to see a reaction on the daily time frame. So last week, a week today, I was analyzing DXY and I told some of my mentees that obviously that price is going to come back to this daily fair value gap to continue the bearish movement. And this week, this is how it played out. Price coming to this daily fair value gap here and dropped down. All right. So starting here right now, you can clearly see that price has taken out this external range liquidity here. And whenever price takes out external range liquidity, the next thing price will do is either leave a fair value to continue pushing down, or later on, price will come and fill up that fair value. So here on the daily time frame, we have DXY creating another fair value. We have DXY creating another fair value. Now, this is my monthly draw on liquidity. I'm expecting to see price drop into this monthly fair value gap before I will see a reversal on the dollar index, or before I will know that, yes, dollar have gained a little strength. If I know that dollar have gained a little strength, all right? So right now, in all the dollar pairs, I'll be looking for selling opportunities in all the dollar pairs. USD CAD, USD JPY, USD CHF. Why? Because dollar index, which is which is helping us to know the strength of dollar is currently bearish at the moment. It's currently bearish. It's currently bearish. So the dollar index, the DXY, I'm still expecting the bearish movement to continue. You know, as price is opening this week, tap into daily fair value gap and continue its movement to the downside until we get to our monthly draw on liquidity. So this is what I'm expecting on dollar index. All right. So let's move over to Euro USD. But before I go into Euro USD, I need us to understand something. If DXY is giving us a series of lower highs and lower lows, now we should expect Euro USD, GBPUSD, AUD USD to be giving us a series of higher highs and higher lows. They are inversely correlated. Okay, they are inversely correlated. So dropping to or going into Euro USD, let's see what we're going to get from Euro USD. Obviously, I need to start from the monthly time frame. Now, this is the same thing I'm seeing happening on the dollar index. The same thing happening here on Euro USD, right? Now, Euro USD is an invert or inverse of DXY, right? So now we can clearly see that Euro USD broke this, took out this external range liquidity, and is now going for this internal range liquidity. Now I've seen the bigger picture from the monthly time frame. I've seen where price is coming from, and I've seen where price is going to. So dropping down to the daily time frame, let's see what we're going to get from the daily time frame, right? Now we have this low. I think this should be last 2 weeks. We have this low. We have this low. Price breaking above this high, switching from the down movement to the up movement. So what happened here? What happened here is what I call a swing failure. It's what I call a swing failure because this low failed to break below this low and thereby going on to break above this high, right? So here on Euro USD, price took out this external range liquidity and gave us a fair value gap here. Give us a fair value gap. You can clearly see what happened. Price coming back to this fair value gap. We have this bullish movement to the upside. Now, what I'm going to do here, I'll just have to stay by the sideline until I get a clear movement on Euro USD. It's very obvious on Euro USD that we are bullish. Very, very obvious because we have a break of structure to the upside, right? Price respecting this fair value, closing above it, right? So coming into this week, I will need to see additional expansion on Euro USD. I need to see additional expansion on Euro USD, or probably I'll just have to wait for price to break above this high. For price to break above this high. Price breaking above this high has given me a total conclusion that yes, we are now in a proper uptrend market. All right. So for Euro USD, I'll be by the sideline, although I've gotten the confirmation from the dollar index that Euro USD is definitely going to push up, right? But I need extra confirmation. I can't just depend on one confirmation. I need extra confirmation. I need to see things, not what I'm thinking. I need to be seeing it before I'll be able to make any trading decisions. Okay, so Euro USD going into this week, probably by Monday or Tuesday, we might see that expansion that we are looking for. And the same thing is going to happen on GBPUSD. Same thing is happening on GBPUSD, right? Price giving us a swing failure this low, failed to break below this, and thereby going on to break above this high here, shifting from the down movement to the up movement now. After taking out this external range liquidity, price left us with a fair value gap that was never filled. So Euro USD and GBP USD, the first 2 days of the week or the first 3 days of the week from Monday to Wednesday, I'll just have to stay by the sideline until I get a clear confirmation or a clear order flow, although we know that the order flow is bullish, right? But I'll just have to wait until I get a clear movement. Okay, so the next pair I'll be talking about right now is GBP JPY. GBP JPY. I've been following GBP JPY for over a while now, and trust me, it's really, really amazing. You know, still with the same principle of looking out for two things: internal range liquidity and external range liquidity. Just these two concepts. All right. Now here on the monthly time frame, you can clearly see price has been struggling to break above this monthly fair value gap, but this monthly fair value gap is showing you that I'm super than you, or I'm more stronger than you holding price. So for a couple of months, price have been in this region for like 1, 2, 3, 4, 5. For over 5 months, price have been struggling to either break above this monthly fair value gap or continue the selling, right? So I now drop down to the daily time frame to get a clear picture from the daily time frame. Now, here, this is my only fair value gap, right? Price took out this external range here, gave us offered a fair value, coming back to it, dropped for the first sale, taking out this external range liquidity here again, and offering a fair value after so much struggles with how many days? 1, 2, 3, 4 days, over a week, struggling over a week, eventually expanded to the downside, which was what we were expecting for price to respect the bearish fair value gap, which is the CB, to continue the down movement and come and take out this external range liquidity here. Come and take out this external range liquidity here. So dropping down to the 4-hour time frame, let's see what we're going to get from the 4-hour time frame. Now, here on the 4-hour time frame, it's very, very obvious. It's very, very clear that the order flow here is bearish. It's very, very clear here that the order flow here is bearish. We are seeing series of lower highs and lower low. Have this lower high, lower low, lower high, lower low, lower high, lower low, right? And whenever a lower low is broken, it's simply telling us that we should expect lower prices the more. And I need to keep expecting these lower prices until we take out this external range liquidity resting below here. So GBP/JPY, I'm still bullish on GBP/JPY, expecting price to come back to this 4-hour fair value gap. And obviously, you can clearly see that this is a very big candle. I'm not expecting myself to just jump into the trade from this 4-hour candle. All right. Whenever price comes back into this 4-hour fair value candle, the next thing I will have to do is go down to the 15 minutes time frame and start looking for my entry criteria, right? Which is a lower time frame liquidity grab, a structure shift, and of course, fair value gap. All right. So this is what I have on GBPUSD. So GBP/JPY, still expecting the bearish movement to continue on GBP/JPY until we take out this external range liquidity. For EURUSD and GBPUSD, I'm staying by the sideline. I'm staying by the sideline until I get a clear movement. It's very obvious they have changed the structure from down movement to the up movement, because DXY is very, very strong on showing us the series of the lower highs and lower lows. Okay, the next pair I'll be analyzing right now is one of my favorite pairs, which is gold XAUUSD. One of my favorite pairs, which is gold. So here on the monthly time frame, last week, gold gave us a new all-time high of $2,920 per ounce. Gold gave us a new all-time high. And looking at this monthly time frame, which is going to close in the next 5 days. This is going to close in the next 5 days. We can clearly see that this movement started from here. This movement started from here, which is the monthly fair value gap. All right. So now we clearly know that gold is going to be bullish for a while, but we cannot only depend on the technical analysis. All right. We need to add some fundamental analysis. If you are a gold trader, you need to add fundamental analysis. Political tensions, inflation, these are the things that increase the prices of gold. Looking at what is currently happening in the Middle East and Trump's last speech that he wants to build an airstrip, Gaza, all those things are creating political tensions in that zone, are creating political tensions. So the wealthy ones there are looking to protect their assets. They don't want to lose, just like what happened in Ukraine, the Russia and the Ukrainian war. Most of the big guys there, they don't want to lose their assets. So what are they going to do? They will go for what we call a safe haven, something that they know that if they put their money in, come rain, come sunshine, nothing will happen to their money. the only thing that is going to happen to the money is it will keep increasing, because the more people seek for safe haven, the more the prices increase. So gold is what we call a safe haven. In times of crisis, rich guys, politicians in that region, tend to go for gold. They will go and buy gold, store gold. So as they are buying this gold, it's increasing the price of gold. That is why gold is a safe haven, and that is why I have the ultimate the strong belief to say that gold will keep buying, at least for a while. Gold will keep buying for a while. So dropping down to the daily time frame, let's see what we're going to get from the daily time frame. I'll have to remove all this drawing now. From the weekly, last week, I've been following gold for a while, and last week, gold created this fair value here. Gold created this fair value, but last 2 weeks, sorry, gold created this fair value. And last week, I was expecting gold to push down into this weekly fair value, but that didn't happen. And I came down to the daily time frame. Let me show you guys what I saw from the daily time frame. From the daily time frame here, gold took out this external range liquidity here. I remember we're only looking out for two things: external range liquidity back to internal range liquidity. External range liquidity back to internal range liquidity. So here I have this daily fair value gap. I have this I have this daily fair value gap here. So on Friday, price closed above this daily fair value gap, right? And taking out previous day low. Where is my previous day low? You can clearly see price took out this low here, giving us a total soup. Price took out this low. So dropping down on the 1 hour time frame. Dropping down on the 1 hour time frame, right? This low failed to break below this low, right? And thereby going on to break this high. So now I have a higher low and a higher high right here, and the higher high right here. And what else can I see here? Price offered a fair value in this 1 hour time frame. Price offered a fair value in this 1 hour time frame. So I would like to, maybe tomorrow or this night, I would like to see the next candle open close above this 1 hour fair value gap. Close above this 1 hour fair value gap. So I'm still bullish on gold. I'm expecting gold to buy all the way up to 2,000, down 2,955. I'm expecting gold to give us another new all-time high. I'm bullish on gold, waiting for price to break above this, then I will know the next thing to do. All right. So obviously, we cannot depend alone on technical analysis. I've mentioned that earlier. You need to add fundamentals as well. So let's quickly take a look at the Forex Factory calendar. Let's take a look at Forex Factory calendar. So there is no red folder on Monday, which we might actually see a sluggish market on Monday. Reason being that these red folders are what engineers liquidity in the market. They're what engineers liquidity in the market. But we might actually see some slow start of the week. It's just from my own observations, not necessarily that it's going to happen that way. Okay. So on Thursday we have CB consumer confidence. That's the high impact news. On Wednesday, there is no red folders. On Thursday, we have unemployment claims, which is being released every week. Unemployment rates, which is being released every week. Last week Thursday, they forecasted that 200 and hold on, let me be sure. They forecasted, let this load. last week Thursday, they forecasted that 215,000 Americans filed for unemployment claims. Now, when the data came out, it happens to be that 219,000 people actually filed for unemployment claims. All right. This week now, they are forecasting that 220,000 people are going to file for unemployment claims. Right. We don't know yet until on Thursday the release of this data is going to tell us what we should expect from the market. And on Friday, we have German CPI all day. By 2:30 again, if you're trading Canadian pairs, you need to watch out for this news coming up by 2:30. GDP, gross domestic product. And that same 2:30, we have another news coming out from USD, which is core PCE price index. Okay, so guys, my advice to you going into this new trading week is you need to be very, very careful in the market, especially during the days of high impact news. So you won't just go and lose your funds. Next thing I'm going to drop with you guys this night is avoid that adrenaline rush to always trade because you have some couple of some money in your account. Avoid that adrenaline to trade. Always wait for the right time for you to execute. Okay, always wait for the right time for you to execute and try and keep it simple. Don't mix SMC, ICT, indicators. Don't complicate things. If you know you want to learn one strategy, focus on that strategy. Don't combine, okay, this guy said support and resistance works very well. We now leave the ones you've been working on. We now leave it and go and start afresh. No, it doesn't really make sense. Stick to one strategy. All right. If you want to use indicators work perfectly. Any strategy works perfectly. All right. I repeat again, don't be jack of all trades. All right. Choose maybe 2 or 3 pairs. You can see how many pairs I'm trading. I can't even remember the last time I traded EURUSD and GBPUSD. So my main focus now is on gold. Because for a while now, GBPUSD and EURUSD have been misbehaving for a while, so I just have to leave them. I'm not trying to force trade where there is no trade. Okay, one thing that helped me is my mentor then told me if you open your chart and it looks confusing to you, just step away from that pair. Move on to the next one. And that's the same thing I'm telling you guys now. Anytime you open any chart, be it EURUSD, be it USD XAUUSD, NAX 100, S&P 500, or US 30, if that very chart is confusing, bro, just leave it and move over to the next one. That is the best way to survive in this industry, because if you keep forcing trades where there is no trade, you will keep losing money. And before you know it, you've blown your account. In order to avoid all those things, just stick to a simple rule. And if you're setting your rule, let it be realistic. Let it be realistic and achievable. All right? So I'll draw the curtain here in our weekly analysis. If you have any question, please don't hesitate to ask your questions. And before I leave, if you're just joining the call now, please kindly mute. Before I leave, I need to remind you guys again, opportunity they say comes but once. Take this advantage and learn this strategy that I've used to do some couple of numbers for myself. I showed you guys 2 examples. I'm currently in another trade now using the same strategy. Okay, meet your account service manager. Just tell the person, okay, I'm interested either in the beginners class or in the advanced class. All right. So if you have any questions, please kindly ask your questions before we call it, will I say a day or a night? Don't mind, I'm just joking. All right, guys, ask your questions, please. Okay, all right. I can still see Mr. Steve on the call. Mr. Steve, do you have anything to say before we close for the day?
Okay, I just want to say thank you, Xavier, for putting this absolutely free of charge. I know the future of trading is this smart money concept, ICT way of trading. And we're so excited and privileged to have you here, always guiding and mentoring the community people. I super celebrate you. I know how much people pay as monthly subscription to have access to smart people who understand the smart money concept. We feel so privileged to have you. And everyone on the call, I want to tell you that nothing lasts forever. Okay, take advantage of opportunity during the lifetime of the opportunity. Now you have on the call Dr. Xavier Chimeze. He's not the owner of Capital Lesson, and you might not be here forever. So this is the best time for you to go in, create an account if you don't have an account, log in and fund your account if you already have an account, and get connected. And let's not forget, there is a special group called the Traderton Group, where every day when Xavier go live on the call, he drop trade opportunities there daily. I know how much people pay to get these setups on a daily basis. He does this every Monday to Thursday, okay? On Mondays and Wednesdays, 2 p.m. On Tuesday and Thursday, 8 a.m. He's always live, looking at the market and sharing opportunity. Ladies and gentlemen,